Citi today making a bold call, saying this historic global market rally isn't close to ending and that investors should keep buying on the dips. The firm's bear market checklist suggesting only 3 of 18 red flags have actually been raised, and it still sees 9% rally in stocks worldwide over the next 12 months. Now, Citi expects tech to do well and emerging markets remain its favorite value trade. So should you keep riding this run? Is Citi going to be right in the end? Let's bring in Margaret Patel, Senior Portfolio Manager with Fargo Asset Management, and Richard Weiss, Chief Investment Officer over multi-asset strategies with American Century Investment. Margie, let's start with you and just start with Citigroup's thesis. What do you think? Are you afraid of any red flags that have been raised, even if it's only 3 of 18? Do you think that this bull market run can continue? Or are these new trade fears going to give you a little pause going forward?
No, I think the trade fears are a minor issue. I think that people are underestimating the very strong, sustainable growth here in the U.S. economy and a lot of the countries worldwide. And I think they won't be derailed by a small rated interest rate going up. So I think it's really going to be a lull and then have a very strong finish. I think a lot of investors are underinvested in the equity market looking for that big correction. I just don't think we're going to get it.
Okay, so Margie, forgive me, it's Margie, not Margie. Understand that you don't think we're going to see this correction, but Richard, it looks like you're getting a little defensive. So are you not so sure that we're going to continue to run higher from here for equities?
Right, we're taking the other side of that trade. With economic growth decelerating, that doesn't mean we're going into recession, but decelerating economic growth, equity valuations fair at best, rising interest rates, the specter of inflation. This is not a recipe for a bull market. And the Citigroup report, I think, buying on the dips is not what we're doing, because if you're wrong on the timing of that, you're likely to catch a falling knife, okay? And I think they undermine their thesis right in the first paragraph. It is true, and we agree, that later cycle bull markets tend to narrow focus on growth and momentum. And that's exactly what the markets have been doing for the past year or so. Okay, this bull market, kind of like a fine wine or maybe an aged Armagnac. It's great, but it ain't getting any better.
Margie, are you concerned at all that so much of the gains, such as there have been gains in the U.S. markets over the past 6 months, have been attributed to 5 or 6 stocks, that it's so concentrated there, and that if it starts to unwind there, there's not much standing behind it?
Well, I think if you look at other market rallies, often a handful of stocks, half a dozen or a dozen stocks, really dominate the big move up, and everybody else is sort of second tier. So I think it's more or less typical of a cycle. And I think those industries really represent the strongest factors in the economy that are going to keep on moving ahead. And if you look at equities and you say, well, what's the alternative? Treasuries are 2.5%, 3%. Junk bonds are 5.5%, 6.5%. The economy's growing at 3%. It doesn't take much for equities to do better than that.
Well, let's ask Richard. I mean, Richard, you're underweight stocks. So what are the alternatives in your view? What are you in right now if you're not, market weight even stocks?
Well, market neutral funds, shorter term bond funds. We're definitely defensive, especially for very risk intolerant investors, retirees, near retirees. So anything that's not dependent on market beta at this point. Within our stock portfolios, while we've ridden that growth bull for some time, we're likely to be shifting gear here, rotating into possibly consumer staples, other defensive sectors, protecting on the downside, much better valuations here if indeed this bull market's running out of steam.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.